Good morning, everyone, and welcome to Morning Market Movers, live analysis for day trading, where we take a look at the hot spots in the markets for today. I am Todd Rich. I'm with Nadex. With me from Keep Trading Simple is Brian Caprice. Yay, we got Brian back.
For today. I don't
For
know. The
today.
struggle bus is real today.
Before we jump into it, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone. That any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. Whoop. Now, what are the hot spots in the markets for today? Now, I told you yesterday, get ready, be prepared. Whoops, before I do that, we did have our inflation numbers come out. In fact, I'm actually going to scroll back a little bit, and we can first take a look that Germany had its inflation numbers come out previously at 3.9%, now at 4.1%. Inflation is here.
When's it?
We are seeing it. And it's not that transitory thing that Brian
Yeah,
keeps talking about.
transit. It's all good, Sabir. Don't worry about it. Nope. Nothing to see here. Move along.
Nothing to see here. Well, our core inflation coming in at 4%, but the year over year number previously 5.3, now 5.4. I believe that's a little bit higher. Now, how did the markets react? And I already started to share a quick glimpse, and we're going to get into much more in depth on this. But the impact has been, they ran gold up. The Europeans ran gold up in the overnight session to then, as immediately when the number came out, sell. And gold as well as silver. Now, what's rather interesting, before I flip it over to Brian, I am going to back this up because we had shown this before. This is on a 1 hour chart, and we were looking at just at the fib levels. They did push gold up into that range, a 50% retracement, right around just shy of 1780. At which point they completely collapsed it down. And we'll talk about where are levels to be looking at gold. It's sort of a bit in no man's land at the moment. If the retail trader gets in and continues to sell it off, you might want to be looking out down closer to around 1750, that 23.6 fib level, which has actually been an important level in the past. But we'll have to wait and see that it's already made. I'm going to make this a 15-minute chart now, and you can really see what gold has done. They ran it up in the European session. Numbers came out and kaboom, completely gave it all up in one single candle. Uh, Silver making a similar-ish move, not quite as severe. And then we've been seeing dollar strength. So it's been weakness in the metals, strength in the dollar. The equity markets pretty much taking it as ho hum, not doing much of anything. And the energy markets also not doing a whole lot, but we will have some action tomorrow. I do want to remind everyone before I flip it over to Brian, I got to find this again, that because of Columbus Day earlier this week, or Indigenous People Day, or whatever you want to call it, uh, tomorrow, not only are we going to have our jobless claims numbers before Brian and I go on in the morning, afterwards, and we will set you up for this tomorrow. We're going to have both nat gas inventory and crude oil inventory in the same day. So energy should be interesting for tomorrow. But with that, let's go ahead, Brian. I'm going to flip it over to you and let's talk about what we got today.
Mhm.
Mainly precious metals and dollar strength is what we're seeing with these inflation numbers.
Yeah, when you were talking, I was watching just trying to see the currency market overall to see if it was really affected much. Because again, higher CPI is great for the dollar. We know they're not raising interest rates for a while. They're still trying to figure out this taper thing, but overall across the board, it really didn't have too much effect on the global kind of forex spectrum. A little bit of movement, but all of them are very, very kind of shy. And the reason why is because we have the G20 meeting starting today, and we mentioned yesterday that was going to be a hot button. Are they going to talk climate change? Are they going to talk COVID recovery? Are they going to talk global tax? The agenda is still not really kind of out there as far as what the big headlines are going to be today. So while CPI affects us, it doesn't necessarily affect the rest of the world. So the currency front is really kind of flat right now. You mentioned year-over-year numbers. Again, when we talked, originally it was we're going to let it run substantially hotter or was it substantially? I forget what he said. For an extended period of time. Remember, the
Right.
mandate is 2. It's over 2 times that, almost 3 times that right now. So everybody had assumed that they were going to run it at like 2.5, maybe 3, 5.5, a little bit higher. And again, there's major problems coming down the road. The month over month is what I'm watching more. And the reason why is, again, I joke all the time about this transitory thing, but again, it was higher than expected again, and it's not negative; it is positive yet again. And this is one of those things that there are cost of living adjustments that have to be paid depending on, there's government programs, there's pension programs, there's insurance products. There's a lot of
That's
things out
actually
there that have
a
cost of
story
living.
from today.
Hmm.
The Social Security is going to make its largest increase
Yeah, they have
in
to.
payments because they're going to have to jack them 6%.
Yeah, it's the
Uh,
cost of living adjustment. Yeah, and those are things that they take. I mean, it took a while to get here, but then it's going to be here, and they don't necessarily go backward. And I keep saying this, that once you're used to certain levels of pricing, you don't go backwards. They would just absorb that and say, "Hey, listen, our profits look great, guys. Earnings are good." It's not like they say, "Hey, you know what? Our earnings are only allowed to be X, so we need to lower all of our prices because we don't need it." It's not. It does. That's not how it works. It's capitalism, guys. It's here to stay. So why they're still stuck in there, I'm not sure. But anyway, 4% is, or 0.4% is higher on a month over month basis. Other small things in here, talking about China and the EU and things like that. I think gold is obviously the big one to watch out for. If you guys attended yesterday's session, we were talking about how big the CPI number would be. It is traditionally not one of the big 3, but right now, all eyes are on inflation and recovery. So it's something that we had to watch out for. Yesterday, we mentioned the 1777. Actually, we lowered the zone a little bit, and we talked about if we were sitting up there. And again, as Todd mentioned, here's the European session open, and they just kind of grounded higher. And again, it was a decent move, right? Impulse correction, impulse correction, impulse, and the same strategy that we've given you for oil inventory reports, we've mentioned, works for news releases as well. CPI and retail sales in particular, it works amazing for. Here's a 30-minute level of sellers. Price was driven right up into there. We talked about short duration contracts, and Todd pulled that up there, and we blew through in one candle, right? In less than 30 minutes, we blew through 6 contracts to the downside. Now, does it matter what the number is? No, we just know that, again, we were in an area where sellers had proven themselves in the past that they had stepped in. If they didn't, price would have went higher. We knew that the Europeans positioned it. If you want to short, you want prices to be high, not low. So prices went up. Now, Todd mentioned it as well. And remember, I do the multiple time frame analysis in pretty much everything. But, just to further add to this, if we go up to a 4-hour, and again, Todd drew this for you, right? If we draw fibs in here, we talk about like double and triple witching. You guys can see, I won't put it all the way across so we can see near where price is. Drop it back down. You guys can see that not only was that an area of supply, it just happened to be the 50% pullback as well. Again, when we talk about overlapping strategies, a lot of people try to do this with indicators, and they grab a MACD and RSI, and they just keep stacking and stacking and stacking and stacking and stacking. And, strategies stack well, indicators do not, because you end up with 3, 4, 5, 6, 7, 8, and got 12 indicators that half of them tell you one thing, half tell you the other. But when you have 2 strategies that are overlapping like this, something
right.
like Fibs as well as something like this, again, remember, Fibonacci is not supposed to be a standalone system. Look it up. It says that it's supposed to be a component of a greater system, but some people use it just as that. Here's one where, again, identical, it matched up. Now, where gold is now, can you get into it now and start shorting it? I'd say probably not. The move has already occurred. It is a parabolic move down. There is an area of buyers here. I would expect a bit of a retrace because, again, gold is more inflationary based. This is showing that there is more inflation coming in, at least in CPI. It's probably due for a bit of a retracement today. Is it going to explode up to 2,000 or 1,800 today? Probably not, because people are quite negative on gold in general. But again, I always get asked, how do you trade news? This is how you do it. The move happened before the release came out. It went all the way up to a zone. And again, using something a little bit farther out of the money, not at the money, but a little bit farther out of the money, your risk is lower in the trade. And then what did it do? It blew it out. It went 6 things. There's no more binaries left down there. Close your position down early. That's it. Done for the morning. So
Right.
again, just another one of these examples of how they overlap. Silver is a little bit more choppy. Silver didn't really get to a level, and I wouldn't say that it was driven up slightly, not quite as much as gold. And again, silver is, as I said, silver is kind of the Reddit version of gold. It is not actually the main. It is a proxy, kind of like the dollar CAD would be a proxy for oil. It didn't get to the area of sellers, so again, gold would have been the setup today. But talking about double witchings, I think the indices are important as well. Yesterday when we talked, I'll bring this back down to a 15-minute, and I want to bring these up because again, inflation and indices definitely go hand in hand. The VIX is negative, but you're seeing the indices start to roll because seeing more inflation is not good for them because they know what's coming. But yesterday we were sitting right here, and again, I mentioned the same thing, that there are different fib levels, and when you can have overlapping systems, we mentioned that the 50 kind of got chopped through and it wasn't quite at a level, but we did have a level of sellers right at the 61.8, and you guys can see there's your 1 to 3, came all the way back down, and then hit it again, and really it's kind of in that transition yet again. So again, this is where those overlapping systems is very, very helpful. And again, in my case, it's supply and demand, matching it with fib. But I would say overall in the indices today, watch them. They're probably, you can see them all down. This all makes sense. NQ, you're like, wait, why is NQ up? It's down. It's just that it got pushed up in the European session so much. So,
Right.
As far as what else we can do today, I would say the big thing to watch out for is going to be the G20 headlines. We
And we
don't know
also
what
have
they're going to be.
the Fed's releasing their minutes today at 2:00 Eastern,
At
so we'll
2,
get a
yeah.
glimpse at that.
Mm-hmm.
So we are
Well, I can tell you
going
what they're
to
going
have
to say.
some more.
Here's what they're going to say. I don't have a copy of this. They're going to tell you that inflation is transitory, that it is higher than expected. Again, they knew that. They're going to mention tapering. And remember, some people are like, well, maybe we shouldn't do the tapering thing yet. We should hold off a little bit. Interest rates next year. It's another one of those things that it's another kind of hole in the side of the boat. They can keep plugging it and saying that, hey, we don't need to do anything. But I'm telling you right now, seeing these numbers again, another month in a row, Jamie Dimon knows what he's talking about. He said there's going to be SWIFT, and they are going to be required. Now, does the Swiss movement get time with Powell being replaced? It absolutely could be. That's when you see those violent changes. But I would, not a betting person, I would be on Jamie Dimon's side right now. If there was Team Jamie Dimon, I would be on it because again, all this data justifies it. He's a very intelligent man. He knows what he's talking about. He sees things on a much higher level than I do. But when he's making comments like that, he's calling a shot right now. And he's one of those big names that has done it in the past. He's going to do it again, and seeing the same stuff. Everything is lining up for the perfect storm. And remember, we already know the EU is starting all their tapering, cutting everything in January. And we're now halfway through October, so
we're gonna. The U.S. is gonna have to follow suit. Hey, while we've got, can we just take a quick peek at some dollar strength before we call a morning here? I don't know where I think we might be seeing it most in maybe the dollar Swiss.
Dollar Swiss is actually down right now. I mean, here's the pop. I mean, they're all going to look very, very similar right now. It looks like on the chart, it looks like I can stretch it out and make it look really, really exciting. But we're only talking about 19 pips right now. The problem right now is that even something like the euro dollar, you consider the euro dollar came crashing down. Got to be on a 30. And again, surprise? No. I mean, you guys can see that there was a level sitting right here. We knew that we had sellers, and again, we knew that it was tested already. So this is not a fresh level. But we knew that there was a retest, and it did the same exact thing. Look at the 3 o'clock window right here. This is the euro dollar. The euro, it drove price right up into a zone. And again, it really hit it at 6 first, but then the second was right around this time, and it actually already started to move. It's kind of like they knew, right? The 830 candle started right here. It's this one. But it was already a level where we saw sellers coming in the past, and that's with weak ECB data. Actually, I'm sorry, EU data down here. They're talking about, weaker. Here it is. Industrial production is down in the euro area. So again, there was already negative news. So you can see it's a bit more of a drop, about 30 pips. So like I said, the currency market is somewhat paralyzed right now because of G20 and the implications of such a large meeting. So
all right. I also want to remind everyone again tomorrow. Be sure I dropped the link in for today. You could certainly take a look at tomorrow. We will be talking about nat gas and oil tomorrow morning because we will be taking a look at those for those news announcements. And remember, before we start, we'll have some of those jobless claims numbers, getting a glimpse on what's going on with the economy and the recovery. With that, if you've got any questions for Nadex, please email us, customerservice@nadex.com. Brian is also accessible. You can email Brian at support@keeptradingsimple.com. A quick recap of what we discussed today. Inflation is here. We are definitely seeing it. And we saw an immediate reaction. Metals, precious metals, they had pushed up in the overnight. immediately gave back all of those, a pretty dramatic swing in the precious metals, and we saw some strength in the US dollar.
And don't
With
forget,
that,
this morning is when Captain Kirk finally goes to space.
oh, and then we got that to look forward to. Maybe that'll
Yeah,
be a
it's this
nice
morning.
distraction today.
I think they're ready right now. It got delayed, but today is Captain Kirk's day.
I can't. I'm trying to remember how it goes. To explore where no one has gone before. I can't remember the beginning of Star Trek. I need more coffee this morning. All
I was
right,
gonna
with
say,
that,
I'm the one with no sleep, Todd, and you're messing up Star Trek. Wow.
I'm not messing
At
up
least you didn't
Star.
call it Star Wars. It could have been worse, Todd. You could have lost
Yeah,
all of
I
our
wasn't
fans
going to
in
do
one
that.
statement.
I wasn't going to do that. All right, with that, Brian and I will catch you again tomorrow morning. Good luck in the